One of the most important things that you need to understand is once you start to get your money right, you need to know where to put your money. You don't want to put your money under a mattress like a drug dealer. You want to make sure you are parking your cash in the right place. And today, I'm going to show you exactly where to put your money and the 7 best places that you can look at to stash your cash. Now, the first thing to understand is this video is not where to put your long-term future investments. If you want to build your wealth and be able to retire, you still need to invest your money. So you need to invest in things like a 401k, a Roth IRA, a taxable brokerage account, real estate, businesses, those different types of things. What we're talking about here is places to park your cash. I'm talking about your emergency fund where you need to have 6 months of expenses saved up in your emergency fund. Things like short-term savings where you're saving up for a down payment on a house or a down payment on a car, or maybe you're saving up to buy that first rental property. All of these are fantastic reasons to keep your money in cash and put it in some of these places. So let's talk about some of these places. The first one is a high yield savings account. Now, high yield savings account is my favorite place to put cash because a high yield savings account allows you for a ton of flexibility. Now, if you don't know what a high yield savings account is, it's exactly like your savings account at your brick and mortar bank, but typically they are online and they have much higher interest than does your brick and mortar bank. If you don't know what a brick and mortar bank is, I'm just talking about like Chase, Wells Fargo, those types of banks. They don't pay you much interest in your savings account. So you don't really want to keep much cash in those savings accounts. Instead, you want to get it into a high yield savings account that's going to pay you some interest. Let your money make some money for you while it's sitting in cash and it's not being invested. So my favorite high yield savings account is either Ally Bank or CIT Bank. And Ally Bank has been one of my favorites as of late because they have what is called savings buckets. Now, I'm not affiliated with Ally whatsoever. I just like the product because what savings buckets allow you to do is actually budget your money inside of your savings account. This allows you to categorize your savings account by what you're saving up for. You don't have to open up a bunch of different sub-savings accounts. Instead, you could just have these savings buckets available to you. So inside of Ally, really cool stuff there that they have those savings buckets, and you can automate it. So you can automatically send your money to those savings buckets. If you have your emergency fund in there, maybe your down payment fund is in there, your wedding fund is in there. All of those things can be separated and categorized all in one account. Number 2 is high yield checking accounts. So high yield checking accounts are the same things as your regular checking account, except they just pay you more interest. And high yield checking accounts usually pay less interest than does a high yield savings account, which is why I prefer the high yield savings account. But if you're really into checking accounts or you just want to have one single account, then a high yield checking account would be a great place to park your cash. There's a number of different high yield checking accounts out there. Companies like Fidelity offer them, so do Ally, so do all the places that have the high yield savings account. So you can look and see if you can find a high yield checking account that may be best for you. Number 3 is certificates of deposits or CDs. Now, the way CDs work is a little bit different than a high yield savings account. Whereas a high yield savings account, you can pull that money out whenever you want to. CDs make you keep your money inside of that CD for whatever term that you purchase. So say, for example, you go out and you want to buy a CD. Well, you can look at a bunch of different options like a 1-month CD, a 3-month CD, a 6-month CD, a 1-year CD, all the way up to like 30 years if you wanted to, but I don't see why you'd ever want to do that. So the way that this works is that you put your money into that CD and say, for example, you buy a 6-month CD. Well, you put your $1,000 into that 6-month CD, and then all of a sudden that money is going to compound for that 6 months with whatever interest rate you and that bank agree upon. So this is something where it's going to lock your money up for that time frame. Otherwise, you pay a penalty if you take it out too early. But at the end of that term, you're going to earn a little bit more interest than maybe a high yield savings account would have. Now, right now, a lot of high yield savings accounts still have a high interest rate, so I still like them more than CDs because CDs don't let you have that flexibility and they lock you up. Number 4 is money market accounts. Now, money market accounts work almost exactly the same as high yield savings accounts with some minor differences. And really, if you can find a money market account with a higher interest rate than a high yield savings account, there's really not any reason to not go with that money market account. Typically, what I'm finding is some money market accounts may have slightly higher interest rates, but at the same time, you got to look at when you're looking, where you're looking to see which one has a higher interest rate between the high yield savings account and the money market account. The next one is treasury bills, or as a lot of people call them, T-bills. And T-bills are fantastic places to park cash, especially if you have a large sum of cash. The way that this works is there's actually a bidding process, or you could buy them through your bank who has already bid on some of these, and you have a T-bill that is government-backed guarantee that's going to pay you an interest. And T-bills have a lot of different factors on where they come up with that interest rate, but once you lock in that interest rate, that is your interest rate. It will not change like a high-yield savings account. So say, for example, you are in an environment where there are really, really high interest rates, then T-bills are fantastic. It's a great place to put your cash. In fact, the best investor of all time, Warren Buffett, he keeps his cash in T-bills. At the time recording this, he has over $150 billion in cash, and a lot of that cash he just keeps in T-bills. Now, T-bills work in a similar way to CDs, where you buy them with a specific term. So it's going to be either 1 month, 3 months, 6 months, 9 months, 1 year, and you can go beyond that as well. And one cool thing that we've talked about before is a T-bill ladder. So say, for example, you want to put your emergency fund inside of T-bills. So you're going to put the first month in a 1 month T-bill, the second month in a 1 month T-bill, the third month in a 3 month T-bill, the fourth month in a 3 month T-bill, the fifth month in a 3 month T-bill, and the 6th month in a 6 month T-bill. That's how you scatter it out so that if you need the cash, it's going to mature in time, and you just complete that cycle over and over and over again. And typically with T-bills, you can look, there's usually a sweet spot where the interest rate is highest. And the last time I looked, it was somewhere around the 6 month time frame where the interest rate was highest. So that's the perfect time frame to have a T-bill ladder set up for you if you're using it for your emergency fund. If you know you're not going to use the money for 6 months, you can go with something like a 6 month T-bill so you don't have to recycle this over and over and over again and keep doing that work. But at the same time, you always have that T-bill ladder available to you if you want to do it that way. And you can also do that with CDs. A CD ladder is also a great way to make sure that it is maturing at the time that you want it to. Another option is I-bonds, and I-bonds became really, really popular right after COVID-19 because inflation was so high. And I-bonds get their interest rate by a number of factors, one of which is interest rates, and the second one is inflation, and it has a calculation to get those numbers. And at one point in time, the I-bond had a 9.2% rate of return, which is like a guaranteed rate of return of 9.2%. Was an amazing time to be buying I-bonds. But the problem with I-bonds is you can only buy a specific amount. So you can only buy $10,000 per person in your household. So when you go out and you buy I-bonds, you are very limited to the amount that you can buy if you have large lump sum of money. So if you have $100,000 that you want to get into I-bonds, you really cannot do that. You could buy one for you, one for your spouse, you could buy one in your LLC, and one in a nonprofit. But outside of that, there's not much more that you can do to get more money into I-bonds per year. And then the last one is money market deposit accounts. Now, if you've never heard of a money market deposit account, the way that it works, it's a kind of a hybrid between checking and savings. Whereas it has a higher interest rate than a traditional savings account, but typically has more options to actually access your cash. And they're a little less common than savings and checking account, but they are one where if you can find a great rate on something like this, it allows you that flexibility to be able to have a hybrid between checking and savings if that's something you're looking for, if you're looking to reduce the amount of accounts that you have and you just want to simplify and have a minimalist personal finance system set up. So that's another great option for you if you're looking for another way to get your cash parked somewhere. Listen, hope you guys learned a ton in this video about places to park your cash. If you guys have any questions, leave them down in the comments below, and don't forget to like, subscribe, hit that notification bell as well, and we will see you on the next video.